If you've been around traders before, you must have heard of the phrase, the trend is your friend. This is the crux of the strategy called momentum trading. It's based on the concept that if an asset is increasing in price, then it tends to go higher, whereas if it's falling in price, it tends to go lower. And it's a general strategy, so it applies to both stocks and crypto. I've personally been using it within my own portfolio as well. Now I want to be crystal clear here. This is not a magic bullet. It works amazing under certain market conditions and suboptimal in others. So in this video, I want to break down for you momentum trading in the crypto world, how it works, 4 different strategies, the huge benefits, potential risks, and finally the bot I'm using to handle all of this. So if you are thinking about diversifying your crypto investment strategy and not just be 100% hodl, then this video is exactly what you've been looking for. Strap in, my friend, because it's time for the deep dive. Welcome back to BFB. I'm your host, Kevin, and in this channel, we're all about that deep research and honest opinions to help you get that long-term edge in the crypto space. While you're watching this video, if you find it helpful or informative at all, then please just smash that like button because that one quick click would help me out immensely. Alright, so what is momentum trading in a nutshell? If we take a quick step back in physics, momentum is the amount of motion that an object has. And Isaac Newton taught us that an object in motion tends to stay in motion. So if we apply this to the trading world, an asset also has momentum as defined by its direction, up or down, and its speed of price change. In this strategy's most basic form, you evaluate an asset and buy it when it starts picking up steam, and you sell it when it starts to cool down. The concept here is that if there's enough force behind a price move, it will most likely continue in that direction. This is related to several popular sayings you might have heard of before: buy high, sell even higher, or sell your losers and let your winners ride. If you remember, this is the exact opposite of the famous phrase that we hear many value investors say all the time: buy low, sell higher. So momentum trading kind of sits at different ends of the spectrums to that. Now, what's really interesting is that this strategy has been around for hundreds of years now, and along the way, it's picked up a lot of strong believers and a lot of vocal critics. It definitely is more of an active trading strategy versus a passive buy and hold approach per se, because you need to be constantly evaluating and reevaluating an asset's momentum in case a trend changes quickly and you need to adjust your portfolio accordingly. Since we're dealing with momentum here, this strategy is focused more on technicals than fundamentals. What I mean by that is you're not necessarily evaluating a company's financial reports or a crypto coin's tokenomics per se. Instead, you just look at technical indicators like moving averages, RSI, volume, and so forth. There's also multiple flavors of momentum trading strategies. Like you have absolute momentum, where you just take a look at one asset, for example, Bitcoin, and buy it when momentum is trending up and sell it when momentum is trending down. You also have relative momentum, where you compare the momentum of a group of assets like the top crypto coins, for example, and buy the ones that have the most momentum and sell the ones that don't. Then you even have more complex models like dual momentum or triple momentum, which we'll touch on further in a bit. Here's a simple example to paint a better picture for you. Let's say we're only looking at Bitcoin and using moving averages to define momentum. So we could track a faster moving average, or the 50-day moving average, and then we could track a slower moving average, the 200-day moving average, right? So we have 2 of those moving averages on the price chart. And when the faster line crosses the slower line going upwards, that's a bullish price action and we buy. And when it goes the opposite direction, crosses it going downwards, then that's a bearish price action and we sell. You can, of course, execute these trades manually, but it may be better off for you to write a trading bot to execute this simple strategy, or to buy a bot that lets you do the same thing. Of course, I want to know that not every one of these trades is going to turn out profitable, but the goal is to perform better than other strategies like buy and hold, especially in specific market conditions. Let's now take a look at 2 specific benefits of using momentum trading strategies in the crypto world. Number 1, it's proven that this strategy can get you massive gains, even beating out buy and hold strategies. Especially in the crypto world, you can use altcoins in this strategy to stack Satoshis more than if you just buy and hold Bitcoin. This especially works well in the bull market, where altcoins are rocketing and gives us double-digit gains in a short period of time. The number 2 big benefit of momentum trading in crypto is, depending on the specific strategy, you can also protect the value of your portfolio during a bear market. Because think about it, the technical indicators tell us that we're now trending downwards and it sells into stablecoins, which is much better than me hard-headedly holding my portfolio all the way down to 80 to 90% losses. Now, of course, this wouldn't perform better than you just going 100% cash at the start of a bear market, but let's be real here. Who can actually do that properly and also get back in at the right time? That is an impossible task to ask someone to do. So this may sound amazing, right? You're ready to go and try this out, but hold up. There's also a lot of fair criticisms and disadvantages to this approach that we have to mention too. First, there's a lot of studies and reports out there, especially in the stocks world, that shows that momentum trading is way better than buy and hold. But there are a lot of fair criticisms of those reports that I've seen. Some people say that the statistics behind those studies aren't as solid or rigorous as they need to be in order to draw those strong conclusions. For example, I've seen critics say that certain momentum models succumb to overfitting. This just means that they are fine-tuning their strategy to work really well for a specific set of historical data. But if it's fine-tuned too much to any specific data set, then it loses the ability to predict future results for a more general set of circumstances. Other studies cherry-pick time periods that work really well for their strategy, but exclude periods where their strategy underperforms. Now, either way, we got to keep in mind that past performance is no guarantee of future results. That's a given for life, right? No matter how amazing momentum trading performs in the past crypto cycles, it doesn't mean that it's guaranteed to give us the same performance in the future. The second disadvantage is that there's several market conditions in which momentum strategy definitely would not work well. Like if there's a choppy sideways market, it would definitely be hard for a momentum strategy to operate. Bull traps and bear traps also make momentum strategies perform suboptimally. For example, if it looks like we're going up now, per various indicators, the strategy tells us to buy. But then it turns out to be a trap and starts falling further down, then the strategy tells us to sell, and we just lost money on that trade. This also happens in the other direction with bear traps. Now, the last disadvantage is trading fees. Since this is an active strategy, we're constantly evaluating and rebalancing our portfolio, which means your fees can pile up. And if you're using a bot, those fees can add up even more. So you definitely need to do math to make sure your true profits are worth it after you factor in all the fees necessary to run this strategy. Alright, so now that we have a more fair view of the pros and cons of momentum trading, I want to walk you through the bot that I use to personally execute this strategy for me. It's called Tradeium, and it currently works for both Binance and Binance US. It's really easy to set up. All you need to do is connect your API keys with trading enabled and make sure you have some coins on those exchanges already. Then there's two main types of bots you can choose from, TrendBot and MarginBot. TrendBot uses a dual momentum strategy where you select a basket of coins for the bot to choose from, or just use one of their preset baskets like I do. Then the bot buys more of the coins that are in the strongest uptrend, and then if the coins go into downtrends, it sells those to USDT. It's constantly evaluating their momentum and rebalances your portfolio every 6 hours. MarginBot, on the other hand, uses a triple momentum strategy, which adds leverage to the mix. Essentially, it considers the average strength of all the coins in your portfolio, and this kind of serves as a gauge for the entire crypto market. So when your portfolio is performing really strong, the bot will use margin to add fuel to the fire and increase your position size by a calculated multiple. These bots have both performance and management fees, but if you take a look at the blog post explaining them, I'd say that they're very fair fees. And if you want to cut down their fees anyways, you can get a discount if you hold their DTRM tokens in your MetaMask wallet. I've been using just a TrendBot for several months now, and I've been overall really happy with the results. It helps me fight common investing biases. It follows a trend with robotic precision and doesn't let me succumb to my own whims. For example, let's say I'm looking at Bitcoin's price and it starts to go up and I'm like, this doesn't make sense. It's going to come back down to earth. Let me wait. And then it keeps rocketing and I missed out on all of that. That's not ideal, right? And using a momentum trading bot like Tradeium can help me avoid those situations. Or on the other hand, if prices start dropping a lot, I may think, wow, these are bargain prices. It's time to buy. And then after I buy, the price drops off a cliff. This is something that be avoided by Tradeium if it sees that the trend hasn't turned yet. That's the beauty of Tradeium. It's hands off and does the trading for me based on technical indicators. It also has a dashboard that compares the bot's performance than just to simply holding Bitcoin. For my case so far, in the past few months, sometimes it has outperformed Bitcoin and sometimes underperformed. So like I said, it's not a magic bullet or else everyone would be doing this and then it would lose any advantage that it has. That's the basis of something called efficient market theory. My bot results have swung back and forth over the past half year, even though it has made massive gains regardless because we're in a bull market. Now, what I'm personally doing is using Tradeium with just a percentage of my portfolio and then hodl with the rest of it. I think this approach is the optimal one, honestly, rather than go all in with one strategy or another. I don't have access to Binance.com because I'm a US resident, so unfortunately I can't speak to MarginBot and how that's working out. But overall, I like Tradeium and I definitely think it's a solid bot that you should check out and consider. Well, that's it, folks. Let me know down in the comments your thoughts. I'd love to hear them. And if you want to try them out, please use my link in the description below. It's not a referral link and this is not a sponsored video. I just wanted to share with you my momentum trading strategy and how I'm trying this out in the crypto space. And while you're down there in the comment section, why not give this video a big fat like, because that would help me out so much. I'm Kevin from BFB. I have such a juicy slew of videos for you coming out this week. I hope you have an amazing rest of your day and I'll catch you next time.